Hello and welcome to Pro Trader Strategies Market Commentary for Friday, March the 15th. My name's Eric Wilkinson, and some of you guys may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind everything we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies, and at the end of the day, we are here to teach you some of these different strategies, but it's up to you to implement it in your portfolio in your own way. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on. Yesterday's webinar went over really well. It was on the short iron condor, so if you haven't checked that out, go to protraderstrategies.com and sign up for that. It's a really good one, especially for high implied volatility markets. And when you think that the market is going to settle down, let's say, and kind of start trading in a range like what we've seen. Yeah, we've had some big moves in these markets, but they are basically unchanged for the most part. They haven't really gone anywhere with all these different types of moves, up on the day, down on the day, and we're right back to where we began. But let's talk about some economic data. Not really a whole lot across the pond. We did get European CPI, Consumer Price Index, in line with expectations at 1.5%. And then here in the United States, we got our Empire Manufacturing Index came in at 3.7. Now remember, these numbers have been all over the place. It was expected to be at 10.1. So not quite as good as was expected, but it is positive. That's a good thing. You know, we'd like to see those numbers cranking up a little bit. Capacity utilization came off just slightly, but it's still at 78.2. It was expected to be 78.5, so in line for the most part. And then we got industrial production came in at 0.1%, expected to be 0.4%. Last month's number, remember, it was it got revised because it was a little bit lower than what was expected. It was a negative 0.6, and they revised it up to a negative 0.4. So with that revision, makes the headline number look a little bit better, but still not great altogether. Preliminary University of Michigan consumer sentiment came in at 97.8, expected to be 95.5, and JOLTS jobs openings came in at 7.5 million. 7.6 million, expected to be 7.2, so more openings means that companies are looking to hire. Therefore, if they're hiring, they obviously think the economy going forward is looking pretty rosy, so those are good signs. And then University of Michigan inflation expectations came in at 2.4%, so not too bad. All right, let's talk about the markets here. So we've got crude oil right now coming off just a little bit. I can't really get through this Fibonacci extensions. Remember, we talked there's a lot of overhead resistances for crude oil to get through. It got through the Fibonacci extension, but still has the Fibonacci what is that, the 78, I think, or the 38, Fibonacci 38. It's having more trouble getting through, and then once it gets through there, if it does, it's going to have that 200-day moving average just above it. So $63 is going to be a difficult one. Getting into the 60 handle, you know, that is a psychological level, even if nothing lines up with it over here. We have no Fibonacci's or anything like that, but that 60 number is going to be a line in the sand that we need to keep an eye on, and it's right in there where that low volume node is. And that's what happens, right? It's a psychological level. We pop into the 60s and it starts going off to the races because these people that were fighting the 60s start covering quickly, and it makes that market pop. So we get above these Fibonacci's, settle there. It looks like we are easily going to be going into the 60s, and it might happen immediately upon reaching that 60 handle. So keep your eye out for that. I have no dog in the fight here. We got gold futures. This is one of those things I was talking about. You know, 2 days big rally, yesterday big sell-off to kind of engulf both of those, and today we've got a big rally kind of engulfing the yesterday's sell-off. So we've got a lot of moves going on. Markets are moving all over the place, but they aren't going anywhere, which is kind of interesting. So we've gotten up into the 13 handle, back into the 13 handle. Yesterday we lost that, right? So today we are pushing back that Fibonacci, sorry, not the Fibonacci, the 50-day moving average is acting as resistance right now, and you can see it's very close to the value area high, which has acted as support and resistance in the past. When we were above it, it was acting as support, and now it's acting as resistance again. So pretty solid number there, even though Fibonacci's are lining up with it. That's why we need to watch those things, because we see some interesting levels that match up with something where time and volume is being accepted. So that it makes it a little stronger indicator anyway. All right, let's talk about what do we got after gold. This is the gold futures. So we just talked about the gold futures. I don't know what I just lost by closing. And this is the bonds. So bonds, again, last week or so we've had a lot of big moves up and down, and I've talked about this. Bonds really have no place to go because the Fed isn't going to increase interest rates, and I don't think they're going to lower interest rates immediately, at least for the remainder of 2019. I think we're going to kind of be stuck here with the bonds at current levels, with the Fed funds not moving as well. So a lot of moving back and forth as people try and shuffle money around, but it's really going to be stuck here at that point of control for the foreseeable future, I believe. And then, sorry about that. Then we got, I keep making these things bigger, and I'm thinking of making them smaller. All right, let's move on to the equities. We've got the Dow Jones Industrial Average up about 98 points, almost 100 right now. It's gotten above the 38 Fibonacci there, as you can see, but we have overhead resistance coming into the value area high here. So a lot of overhead resistance above us. Economic data being what it is and what we've seen this week, I think that the markets are going to continue to rally. We may go up and test those new highs, have some pullbacks here and there. I'm not saying it's going to happen next week, but it's I think lockstep coming up, unless we have some really bad economic data that is unforeseeable right now. I think the data is going to be coming in pretty in line with expectations. I don't see any major surprises anytime soon. And then let's move over to the NASDAQ. We've got the NASDAQ again moving up against the value area highs. Those are going to act as resistance now that we got through this major line here, which was a nice one where it lined up with the Fibonacci and the Fibonacci retracements there, the 50 Fibonacci on there. Anytime you get the two fibs kind of lining up together, you know that that is a major resistance area. Well, we peeled through that and are getting to these value area highs, some more Fibonacci's along the way. That's where I think we're going to kind of see these kind of moves where we come up and roll over before we go up and test those new highs, which I do think we will in the next few weeks. Might be into April before we see that, but I do think we are going to the highs. All right, E-mini S&P is here. We got up about 13 points. Again, looks almost identical to the NASDAQ, and maybe even the more the NASDAQ than the Dow Jones, I suppose. But you can see that all of these Fibonacci's have been acting as support and resistance, and now that we're getting to the value area highs, it's starting to slow down a little bit on that momentum. But again, I do expect us to continue trading higher. I think the economic data has shown that that we're doing pretty good. All right, so let's talk about a couple of trades that I've taken off basically, and these are the trades I was working on with Tesla, if you guys remember. And in Tesla, I was short the April 165. I was short the April 365 calls, and originally sold those for $3.80, and I was able to buy those back for $1.80 this morning. And forgive me because my trades thing is for the Tesla trade. Yeah, so I sold it originally for $3.60, got out for $1.70 there. So, $1.80. Now I found my trades. So Tesla, I'm out of for a nice little profit with today's move. That was what I was looking for. Selling those calls. Remember, I was selling those 365 calls, so I didn't have a whole lot to worry about. Those 365 calls way up here. A lot of bad news coming out about Tesla. Whether they were going to cut workforce, cut the prices of the cars. Now they're increasing the cars. I don't know. They're all over the place. So Tesla, that trade worked out nicely, and I'm out of it as of this morning. So out of those 365 calls. And then over here in Boeing, this is the trade that we were talking about yesterday in the daily market, or not in the daily market commentary, in the webinar that we did yesterday. It was on the short iron condor. Great strategy if you aren't sure of directional move, or you do have a market neutral assumption. That's kind of what I'm going with Boeing. I think the worst is behind us here on the software glitch that they have on these 737 Maxes. They've grounded all the airplanes that are in somebody's fleet, and then the ones that are being made are put on hold for the software. They're not sending out anymore from the plants. They're going to fix those before they send them, which is obvious. But I don't believe they're seeing a lot of cancellations of those airplanes. I think everybody pretty much realizes that they plug in a computer and they can fix this problem. All right, so Iron Condor. So this is the strategy that I did for the webinar. I followed my rules to a T on this one, and it's in Boeing. Did the April contract closest to the spot month, that is that 35 days to expiration we talk about in here. And I did the April, and I sold, or I did the April 400, that's the ones I bought, the April 405 calls, I bought, sold the 400 calls. And then on the lower side, the other side of the wing of the Iron Condor, I did the put spread, which was the selling the 330s and buying the 325s. All in all, that Iron Condor, the 405, 400, 330, 325 Iron Condor, I did for $1.59. So I collected a little bit less than what I was talking about in the webinar. You know, I'd like to get about $1.65 for that. But on the put side, I moved it just slightly lower because today they were, as you can see, lower on the morning. We've gotten a little bit of rally since I put on that trade, but they were a little bit lower on the day. Early this morning, I think they were down about $3 when I put on this trade. So anyway, I'm a little bit concerned to the downside. I don't think that we're going to go up and test those all-time highs, and may go and try and cover that gap at some point, but I don't think it's anytime soon or during the life of my Iron Condor. I don't think they're going to have enough good news coming out in the next just few days in order to be able to regain all-time highs that they were just seeing before the software glitch. All right, so that's about it. Followed the rules on the Iron Condor. So if you haven't seen that webinar, go check it out at protraderstrategies.com. Out of the Tesla shorts, and haven't added anything other than that Boeing trade, just not a whole lot of high implied volatility, and I need to start adding some premium selling strategies because I've got a lot of premium buying strategies in my long calls and long puts and stuff like that, long option strategies in my portfolio, which I'm not really thrilled about. So I'm trying to whittle those down if I can. That's it. I hope everybody has a great weekend, and if you can't take that, take it easy.